All right, folks, back to work. Hope everyone had a restful holiday weekend. We get some money to make this fourth week of the month of January. And boy, do these charts look fantastic right now. Of course, the S&P and SPY is all ready to go. Nasdaq triple Qs are all ready. I see two clues on these charts in front of us that are tipping me off to where I think some pretty easy money-making trades are waiting for tomorrow. One of those big clues is right here on the hourly charts. It's pretty easy to see. We've been pretty bullish on the S&P and SPY, very bullish here on the Nasdaq and the triple Qs. But if you look closely right now, we have quite a bit of overhead resistance on the S&P SPY, overhead resistance on the Nasdaq and the triple Qs. Look at the S&P, for example, here right now. We had that big run down after the FOMC, middle to late December. And that basically put us right into a trading range on the hourly. Now, ranges love to rotate, and we're now rotating all the way back up here now into key areas of resistance above that range. Now, I know Trump's back in the White House, a lot of excitement right now, optimism in the markets. This may not lead to a complete reversal back down again, but it definitely is one big clue that some profit taking up here and significant resistance is certainly waiting for us up overhead. That's one really big clue here on the hourly. But let's drill down because I have one more important clue on some tick charts. We don't trade off time charts in our trade room. We trade off tick charts because tick charts, they make pattern recognition a whole lot easier. For example, all the time frames, by the way, are on the upper left-hand corner. That is a 7,000 tick chart. And that moving average, the only indicator I use to find winning trades in our trade room, is that 21 EMA. There's one, I think, even more important clue here on the tick charts, and that is that trading range right there in the middle. Now, ranges. Why are ranges so valuable? Well, first of all, ranges are magnets and they love to rotate back and forth, right? We call these pendulum swings back and forth. Now, sometimes when a range gets a really strong breakout, we can then look for a breakout pullback, basically use what was resistance, become support for a breakout pullback. Ranges also tell me I can take the size of that breakout leg, use that as a measured move. That is a key area of resistance. And you can see for yourself here, right? I've measured the amount below and I've measured the amount above. This also lines up right along with all that key resistance that we saw on the hourly chart. We are very bullish right now. And so knowing that there are three different types of kind of situations or scenarios I'm kind of game planning in my mind right now. I want to share those with you guys because I want to make sure you have a roadmap, a game plan to make some money tomorrow as well. For example, right? We may continue going higher. If I continue going higher here, there are kind of two scenarios up here I want to be ready for. One is that breakout pullback that I mentioned before. Now, breakout pullbacks are really cool because if you do it correctly, we can sell on the way lower, we can buy that breakout pullback, and we can add to our winners as we're going higher. For example, if we go higher here, but then we slip underneath the 21 EMA, if I can get some separation going lower below that 21 EMA, that separation is a very big clue. If I can get a lower low in price, separate off that moving average, I can now use what is ultimately a bull trap to sell back down again. Now I can use this range for a breakout pullback, going back up to retest that high again. Now, you know me. I'm not going to try to blindly buy that pullback because it may dump and roll all the way back down again. I will talk about that scenario a bit later on in this video tonight, so make sure you stay tuned all the way to the end. However, if I roll lower now and I start seeing these bears try once, try twice, I'm going to use what is ultimately another bear trap pattern. These are called failure patterns in our trade room. Once those bears try twice here, remember, all that bull momentum is going to want to retest that high here. If we keep on going higher here overnight, there's a good chance we bounce off that breakout pullback and back up to retest the high. Think about this. If you're caught short right here, your stops are sitting right there. I would love to squeeze those stops. I call these failure patterns. And then we know now where the market wants to go, right? It wants to go back up and retest the high. This is where I'm going to look to add to my winners because, guys, the easiest way to make more money in trading is know where the market wants to go and look to add to your winners before you get there. Remember, separation equals strength. Separation off that moving average says, okay, there's one more chance here now. All on board now before we go back out and take out that high. So one of three scenarios I'm game planning for tomorrow is if this thing continues to really race higher here overnight, I'm looking for a breakout pullback off that trading range. Again, as we go lower, I want to see that separation off that moving average. And these counter trend pullbacks, for me personally, these are always small size, half size, quarter size. I go for a quick one-to-one target, remove that risk, get that stop knocked down, just like I talk about in our free video classes. Then look to trap in some sellers once, twice, use my failure pattern to squeeze those stops. And again, we know where the market wants to go. It wants to go back up and take out that high. One last chance to add to my winner. Remember, separation off that moving average, higher high in price. That is a classic bear trap combination. That is a gorgeous way to add more to our winners. Now, let's talk about another very similar situation. And again, I do want to talk about that big reversal going lower because in all reality, I think that is probably where the easier money is made for tomorrow. We're going to cover that here in just a moment. The best thing the buyers can get right now is to go up into another trading range. Why? Because ranges act like magnets. If I see a new range forming up here, that anchors this market higher. And so even if we're running into major resistance right now, a range up there is a huge, huge deal for the buyers. It makes it almost impossible for sellers to knock this down, at least very far. Now, in this scenario, whenever we see a new range up here and a previous range down here, these are some of the easiest breakout pullbacks you're ever going to see because the new range is a magnet. The previous range is a breakout pullback. If you were here last week, we saw a new range on the hourly chart, and that is what gave us the clue of that big reversal, that bear trap we called towards the end of the week last week. So same idea here. If I see a new range up here, I'm going to wait for that pullback. I'm going to look for all of these, what was prior resistance now becomes support. Again, I'm not going to blindly buy this area because I don't know how far it might be here. I don't have a crystal ball. What I do know for sure is that this is a horrible place to be selling. I would never want to sell that because that new range now anchors us going higher. So second scenario for tomorrow is a new trading range. These are even easier. Trap those bears in once, twice. Why twice? Because I want the stops. When you're stopped out of a short trade, you buy your way out. Now, here's where ranges get fun because now as we are trying to run higher, I can add to my winning position with that, what is basically a bear trap combination. Now think about this. That range wants to rotate. So where are the targets? Yes, back to retest the high is a good target. But remember, mark the amount below. Project that above. Obviously, I'm out of space of the highs here, but that now becomes our new target. We run up, we go into a range, we break out, pull back off that prior range, and we then slingshot all the way back up the amount below, the amount above. Promise me, if we see a range forming here overnight, do not cut that trade early. Take some off the top of that move, but leave that runner. A well-placed pendulum swing runner can make your entire week's profits. Now, I have one more scenario I want want to talk about because we're up into resistance on the hourly. We could easily dump hard. That big move happened at 8 o'clock last night. I wouldn't be surprised if we see a big drop here at some point and buyers scoop it back up again. Before we talk about that though, let's slow down for a second because I know most folks watching right now, you know these entry patterns already. You know how we trade traps and failures. You're making money with these already. But if you're here for the first time right now, this might be a brand new language, a brand new strategy. Don't you worry though, I teach the entire system, the entire roadmap. In fact, I have a ton of examples of failures, traps, range breakouts. I cover so much more of this in more detail in our free video course. I'll put a link up top here for you. Don't you worry, upper right-hand corner, hit that link that popped up there and take that free trading course because the strategy I teach in that short video course will teach you a simple trick we use in our members trade room that tells me exactly where the winning trades are going to be each day. It is so easy, you'll laugh once you learn that entry trick. Now, more importantly, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, bottom line, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries each day, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free video course. Everyone loves all the trade examples I include in that short video series. The best part is it is 110% free for you. Also, too, I'm going to put all the important links you'll need down in the description of the YouTube video. Start first with the free video classes. Most folks start making money on their own, all from that free video course. And then don't forget, come join us every morning, 8 o'clock Eastern time. The place to be is in our trade room. I'll put all the trade room membership links down there for you. And keep in mind, I post a ton of charts and videos and mindset stuff on Twitter or X as they call it these days. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn more and hopefully earn a lot more be covered for you there in the description of that YouTube video. That's where you want to go to see a lot more examples of all the entry patterns I'm talking about here tonight in this video. So we've talked about now if we blast up for a breakout pullback. We've talked about now if we go up into a range up here. What if I'm wrong, right? What if I'm wrong? I mentioned earlier that big pullback happened at 8 o'clock Eastern time last night when I'm sure most of us weren't paying attention and certainly weren't trading. So I would imagine there's a lot of buyers who are still waiting for that nice deep pullback they never got right towards the end of the week last week. Now, as if the market makes a dump going lower here overnight, remember, ranges love to rotate. The amount above, the amount below, that will give us a good idea of where our key area of support is. The challenge is this: when we get that rotation back down again, that's going to be a lot of momentum for these sellers. And that will give us a few more entry variations I want to talk about. So for example, first things first here, again, if we start to separate off that moving average and run lower, the way in which I'll look to short this thing on the way lower is going to be a bull trap above that high. Again, separation, lower low, above that high, strong red candle, exactly like I teach it inside the free video course. If we wind up down around these lows now, I have to anticipate that we're going to pop up, try to retest that low before we run back up into that range overhead. That's where all momentum comes into play. So knowing that as I go lower, if I can get a good entry trapping bears in, right? Because this is not a good spot to sell. Right? I don't want to sell on a deep pullback below a trading range. So I don't want to sell down here, but if I can get the bears trying twice, if I can get a good entry signal that allows me to get a 1-to-1 before I go to the underbelly of that range, I'm looking to take that failure pattern, right? That failure should lead into, again, as we go higher, it's always that failure first, separation off that moving average, and that bear trap to add to our position, right? Again, pendulum swing, back and forth, right? Rotation, back up again will give us targets going higher. That's a pretty straightforward one going lower. But I'll tell you though, a lot of times we don't get on those big moves down like that, we don't get that two-try failure. We don't get a chance to trap the bears in. If it runs lower and we see so many buyers, I'll bet there are a ton of buyers who weren't there at 8 o'clock. This thing may just whoop and run right back up again. If it V-bottoms off that low, the hardest part is not chasing after it. What I always do is, if it V-bottoms off that low, I look for the market now to begin grinding, going higher. Anytime we see a grinding move higher, I can find a channel very easily. I can mark it off the high. I can bring it off that low and repeat after me. First test is the best test. First test off the low of that channel. And my favorite entries are always right below one of those prior swing lows, right? Swing low, find one of those swing lows that lines up with the low of that channel. That is a gorgeous way. Again, I would love to get in nice and low, but if I can't get the chance to trap those bears in and squeeze those stops now, the next best thing now is to buy that first test. This could be any of the entries, the entry patterns, by the way, I teach in the free video course. It could be a bear trap, like I'm showing you here. It could be a seller failure pattern, below the moving average, a pullback combination, a strength trade. Again, if you're just joining us here for the first time tonight, this will all make a lot more sense once you're getting through our free video classes. And a final variation, if we do see a big drop here overnight, then we'll grab the Nasdaq here, because the Nasdaq is a little bit different here than the S&P right now. A final variation of this, we oftentimes will see a strong run down. We'll get that easy bear trap down there, trap those bears in and squeeze those stops. We'll get a 1-to-1 first target, move that stop up to point of entry. But remember, whenever you have a lot of momentum going lower like that, it's going to want to roll over and retest that low. Now, my trade room, we call these retest trades, right? Retest trades. And basically what happens is anybody who sells short on that pullback, they take their profit. They become buyers when you go back to retest the low. One thing we know for sure is that retest is a horrible place to be a seller, right? You're selling very low now at key support in an overall bull market we saw on the 60. So if I can get some bears coming in, and if they hold the underbelly of that range, again, this is a winning trade. We will take a quick profit target, remove that risk on this. But if they roll this thing back over now, back to that low, I'm going to use that classic double bottom retest scenario we all talk about so much here on these videos. As it pulls back, and again, I'm not going to pick a bottom on this. I'm not in the business of blindly buying that area. That's a rookie's mistake. The next best thing is to let some rookies come in. Let them try once. Let them try twice. Now we know where your pain is, and now we can buy into those stops for a run back up again. These retest trades are oftentimes our biggest, most lucrative trades in our trade room, because this traps in a ton of sellers. All the bears getting short right here, all these sellers up here become buyers down here. These are rookies chasing after it here with tight stops, small accounts, squeeze those stops and run that thing higher. And remember, want to make more money? Add to your winners. If we bounce up off that and we start seeing that separation off that moving average, that higher high in price, this is always going to be the add-on running back higher again. All right, guys, that is that double bottom retest. And again, this may not be as likely for tomorrow, but it sure has potential to be our biggest winner of the week here. Gonna get that deep pullback here because it's so high up here on the hourly chart. Now, how about some Nasdaq right now? Again, the S&P is running right into key areas of resistance. We're still pretty bullish overall, so I'm not quite ready yet to call this to be a reversal spot here yet, but breakout pullbacks are looking pretty good. Over on the NASDAQ is not as range bound as the S&P was. But you can see right away though, we're very bullish here right now on the NQ, but just like on the S&P, we're running into quite a bit of overhead resistance. And usually in these scenarios, when it pops up, right, comes back down, pops up. Again, it may not be a full-blown reversal, but we have to be aware that there's a good chance for a modest to deep pullback before we go up too much higher here. Now, before I dive into the tick charts here on the Nasdaq, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and share this video link with other trading buddies, because YouTube rewards me every time you like, share, and subscribe. I know we're all busy people these days, especially after a holiday weekend, so I appreciate you guys spending a few minutes with me every evening here on these YouTube videos. So thank you so much for all the ongoing support, the likes, shares, all the subscribes. Now, let's get into business. Roll our sleeves up here and go to the tick chart here on the Nasdaq. We are definitely bullish overall. And again, you can see here on the tick chart right now, there's a little bit of a different spin on this one. You'll notice there's two ranges on this chart. We have a range right here in the middle. And again, these are all tick charts. Upper left-hand corner has all the specific time frames. Why is that important? Why is that range important? Because the amount below the range, the amount above the range, that's key area of resistance. The breakout leg of that range is used as as a measured move up overhead. Same idea, right? Ranges love to rotate back and forth, but now we have a bit of a curveball here. You'll notice we popped up into a new trading range. That's a very, very big clue, because now, let's clean this chart up a little bit here for you for just a moment here. Now, if I roll lower, we start using this range now as our range rotation clue, right? And if we see a breakout of that trading range, we then what? We look for a breakout pullback. So again, like on the S&P, there is resistance up here overhead, but it's not enough to make me want to call this a reversal spot, right? We're pretty bullish here overall. So as we go higher here, I'm looking for that breakout pullback, right? That pullback, that same idea, right? Same idea. Trap those bears in. Use what was resistance as key areas of support. Use that failure into that bear trap combination. Remember, on these traps, you always want to get some separation away from that moving average, higher high in price, right below that low. And remember, if we see something like this, the amount that we break out of that range, that's the breakout leg. That's your measuring leg. Once I know how deep that pullback is, now I know how big that next target should be, right? So if I have a breakout leg that is that large, I can now expect roughly about the same amount of distance there on the target up overhead. If you want to make more money, get better at leaving your runners, and understanding how range breakouts work will make it that much easier. And again, like I mentioned earlier on the S&P, the best scenario for the buyers tomorrow would be we go up, we find a new trading range up here. Why? Because then the new trading range acts as a magnet. The previous trading range acts as a breakout pullback. And that may not sound like a very big deal, but it gives me a ton of confidence now, because now as we pull back right now, I know now where the magnet is overhead. And remember, the amount we go below the range can project now above the range. This is why I'm a very big believer that range markets make it easier to make more money, because again, when I get that bears once, bears twice, when I get that bear trap down there and squeeze those stops running higher, yes, I will take some targets off at that high of day. But again, promise me, if you see a bull range up here, leave a little piece as a runner, because a well-placed pendulum swing can be one of your biggest winners of the week. Now, the reversal trade on this, right? The final kind of that third scenario we saw earlier on the S&P. There's a couple things here I want to talk about. So first things first here, I would love to use this range, the amount above, the amount below. I would love to get a nice big dump off this high, trap those bears in down here, especially below that low right there, squeeze those stops, right, and run back up again. Either a two-try failure, Or I wouldn't complain at all for a V bottom, right? That V bottom begins to grind, going higher, right off that high, off of that low. Again, same kind of game plan we laid out there on the S&P. That would be a favorite of mine for tomorrow. And I wouldn't complain at all here if we ran lower, trap the bears in, squeeze up, retest that low again, 1-to-1 first target to winning trade on that one. But again, these double bottom retests, these oftentimes trap everybody in. We get those bears chasing after it. And again, we squeeze off the bottom. And I know a lot of you guys love these trades. Got a bunch of emails from you guys last week making money on some double bottom retests we saw on all these markets late last week. But let's talk about, though, if we don't get that, right? Because there's a good chance here. There's a good chance here that this range is all we need, right? This range right here may be all we need. Now, here's the problem. If I buy on that rotation lower, would you agree that we're not really buying very low, right? We haven't seen enough. Again, if we really pop up here, then buying a breakout pullback, I'm buying relatively low compared to where the market's been recently. But if I pull back shallow right now, would you say that's buying low? A little bit, but again, not compared to where we've been over the past couple of days, right? We're up into major areas of resistance. So a shallow pullback right now, it simply doesn't get me that excited. What I will do though is, if I get a shallow pullback right now, there's a saying we always use in our trade room. Shallow pullbacks, they make us buy low. If we're buying low, we want to use one type of entry pattern to avoid buying low. It's always going to be a technical trap pattern. Now, previously we talked about bears once, bears twice. You can use that failure pattern to trade back up again. Pendulum. What I'm looking for tomorrow, though, is to go one step further here and get a bear trap underneath that low. Now, this will make a lot more sense once you get through our free video classes, because I talk about this a lot in the free video course. Whenever I'm challenged with buying relatively high, which I believe that is in this scenario, I'm going to try to buy as low as I can. And to do that, there's one entry pattern we look for that gets us in as low as possible. It's always going to be a trap pattern. And there is a difference between a failure pattern, you're buying into stops. You're buying into it as it goes higher, right? On a trap pattern, I'm already in that entry, in that trade long before we go higher. The trap pattern gets me in much lower than a failure pattern. We grab our 1-to-1 target, stop moves up to point of entry. You'll learn more about that inside the free video course. So it's very important. Remember if we make a big breakout, no problem, right? No problem. The pullback is nice and deep in that scenario. But if we pull back shallow, I want to buy as low as I can. I'm going to keep looking for ways to get that higher high price, get in right below those lows here, and we'll keep on using that pendulum swing for targets. Or if it really punches going higher, it then is going to be that two-legged pullback, that breakout pullback off that high, and the same failure in a trap combination I mentioned earlier. All right, folks, I know I covered a lot of scenarios in tonight's video, but don't you worry, tomorrow morning, 8 o'clock Eastern time, I can't think of any better way to learn how to trade. Come out and do it with me every morning at the opening bell. I'm going to put all the important links you'll need to learn more about this stuff in the description of the video. Start first on that free video course. Enjoy all those trade examples. Then come join me in my trade room and we'll do it together every morning at the opening bell. In the meantime, be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.